minutes. All right. Again, so we have program expenses, administrative expenses, and fundraising expenses. There are 3 keys to expense management. Okay? Number 1 is taxes. Not every expense is deductible as a nonprofit expense. Right? Typically, we'd assume that if I have to pay, for certain program expenses or whatnot, we'd assume that, okay, and it's tax deductible. Always remember that not every expense is going to be tax deductible. That expense may just cost you that little bit more because it's not tax deductible. Always remember that. Number 2, reporting. What are the requirements? Right? Can I just go ahead and book the whole, we're going to book the whole, the whole company. We're going to book a trip, we're going to book a ski vacation to the Rockies, right? I just don't think that's going to fly so well, in the reports that are due. I just can't see how it'll be, So that's another thing. Not every expense is legitimate. Number 3 is budgeting. What's necessary? Okay, the keys to budgeting are like this. Number 1, use the cash flow projections, always. Use the cash flow projections, see what's coming in, see what's supposed to be coming in, see what's supposed to be going out, create a budget based on that. Number 2, be thrifty. Be thrifty, by the way. I want to tell you something. I heard the extent of being thrifty, I once heard you guys familiar with Jackie Mason? Well, Jackie Mason once was trying to explain being thrifty, and he was asked actually how sushi was invented. And he says he really believes sushi was invented by 2 poor people trying to open up a restaurant without a kitchen. Okay? So that's being thrifty. Number 3. Using the business model, in other words, what are we trying to offer? What resources are we going to need? Who's our target market? What are the revenues we anticipate coming in? Use that business model to create an expense guideline. Okay? If you have every single detail of your business banged out like that in that business model, we'll be able to go ahead and create an expense guideline that'll be custom made to our agency. There we go. Leveraging resources. Guys, are any of you familiar with leveraging resources? What it is? Let's take a look at the agency resources again. Okay, we have financial resources, we have physical resources, we have social resources, and we have intellectual resources. Okay, there's actually a fifth resource called cultural resources. It's debatable. Some people will say that an agency or a company that has a great culture, a great work culture, that's a resource that can possibly, that's a resource that can possibly increase efficiency. That's a resource that can possibly, just in general make the business more appealing and stuff like that. Okay, financial resources. We have financial sponsors, right? We have an exclusive, some sort of exclusive arrangement with the Bill Gates Foundation. That's our financial sponsor. Cash on hand, loans. We have a loan from a bank. We have receivables, right? These are financial resources. Can any of these be used to leverage off? Leveraging means that I have this resource and I want to use it. I want to use it to gain something more. Based on what I have, I'm going to get something more. Let's say a loan, okay? A bank lent me $100. I'm paying 10% interest on that. Can I lend this loan out to someone else and get 12%? Cash on hand. Can I lend this cash that I have in the bank to the government in a bond and have the government pay me 6% in addition to the cash? So I'm using what I have to get something more. Okay? Physical. I have a building. Can I sublease some space in my building? I have a website. Can I use my website not just for information, but I can advertise for people? My computers. Can my computers be used for anything than the day-to-day tasks that I'm using them in the office for? Do I have a large enough server that can host another agency's data? desks, right? I know that there are a lot of companies actually that have, when they have, less employees or whatever it is, and they have desks. A lot of times they'll rent out a desk for $100 a month, right? We're using what we have to get something more. Social resources. We have an image. Our agency has an image. Our agency is trusted in the community, right? We have a large following on social media, on Twitter. Can we use that to get something more? Intellectual. Typically, intellectual will include patents, but as far as a nonprofit goes, we can say that intellectual property will be community insight, right? We know a certain thing, a certain specific area about a certain Indian reservation. We know the ins and outs of that area cold. Okay, we have an extensive database of information on them. We can go and rent that out. We can go and sell some of that information out. Again, whatever we have, we're getting something more out of it. Okay, cultural we're going to skip for now. It's not so relevant, at least as far as a nonprofit is concerned. Okay, collaboration. Guys, you know what? I just want to shoot up a quick poll. Okay, how many of you guys can how many of you guys can think of some sort of resource that your agency has that can potentially be used to leverage off? Okay, let me shoot up that poll. You guys see it on your screen? Okay. Okay, there we go. 80%. I'm gonna go ahead and close that poll. Okay. 83% can definitely come up with stuff to be leveraged off. 17% can't. Okay. That's of the 17% that can't. Just wondering, if you actually were looking to buy a computer, let's say, okay, or you were looking to build a website. Perhaps the website can be built in such a way that it can be leveraged off. Right? If you're looking to lease an office, perhaps you can lease an office with 3 extra desks that can be rented out. Being able to leverage resources is always a phenomenal way to bring in extra money. Phenomenal. In addition, leveraging resources is a phenomenal way to cut expenses. Right? If we can both 2 agencies can rent the same office, right? And just have just 2 agencies can rent a larger office instead of each agency renting an office separately and paying the same amount of rent. Boom! They both saved expenses. So again, leveraging is a phenomenal thing to keep in mind. Specifically when money's tight. Okay, next, collaboration. Okay, I want to take a quick look at collaboration. First of all, the first thing we have to realize about collaboration is that the only reason why collaboration makes any sense, and the only time it'll ever make sense, is if we can use the equation of 1 + 1 and get 3. Because if we can only use the equation of 1 + 1 and get 2, then I don't need the other agency doesn't need me. Why get involved? I have a business I'm running, they have a business they're running, leave me alone, there's no benefit. Unless there's a tangible benefit specifically for each agency, I don't need it. Okay? I just want to run through this. I see we're okay, let's go. Number 1, we have cost sharing. That's one benefit of collaboration. Number 2, we have a wider target market. Right, because we're both sharing the agency. Number 3, we have expanded solutions. Other benefits of collaboration will typically include generates wiser decisions, produces durable decisions, it fosters action, can build social capital, fosters ownership of collective problems and resources, and promotes change. Okay. There we go. Now we're going to skip this slide. This is, this gets a little bit more technical, so let's just skip it. Okay, guys. Evaluation. Okay, we're gonna. This is, There are just 2 points that I want to bring up in evaluation, as far as measuring the agency's success. Okay, number one, we'd look at the financial statements. Okay, the statement of activities. Okay, that's a snapshot of the organization's business, business operations. The statement of activities will be in every tax return. That'll provide a snapshot of the agency's business operations, the expenses, the income, and everything like that. Next, we have statement of financial position. Okay, this is typically a balance sheet. This is the assets, liabilities, and the owner's equity. This is typically a balance sheet. This provides a snapshot of the financial status. How much do we owe? How much do we own? Number 3, you'll have statement of cash flows. This will provide a snapshot of specifically the cash activity. As far as operating expenses is concerned, how much did it cost us to run the programs, how much did we invest, and how much did we bring in from investing activities, and how much did we spend on finance or receive from finance. Okay? Now, financial statement analysis will always provide the quickest and most concise evaluation